The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon, 877-927-6648. That's the number to call. Thank you, Steve, for 2 great hours. Of course, straight after the show, you've got Larry Pesavento and shows all the way through the day. And don't forget, go to the front page of TFNN. You'll be able to check out Saturday. You've got Tom O'Brien, Daryl Martin, right here in the Boston area, discussing diagnostic technical tools and NADEX. So please check it out. This is also a period where you've got Tiger dollars that you can get, and that is stupendous. I mean, that is really great. I wanted to mention that right away, and I wanted to continue with what I was talking about yesterday because I'm very proud of my opening call. I've been here 10 years. I think I've proved a pretty decent track record, and this is a wonderful time to be able to either up the subscription or to start a new subscription. In fact, today, I mentioned to my subscribers that we're going to go along. We're a little bit too long. I never like this. When we have more than 6 positions, we're almost at a market top. That's just the way it works. It's worked almost every other time. But it's fine because we have some fabulous gain. We've got about a 66% gain in one stock. We've got the remnants of that stock still left from $14.90. It's trading right now at, let me see. Well, actually, I wanted to go through some of these things with you. I wanted to go through some of the work that I do because it's really difficult to discuss it on air. You never really need to see it. If you're looking at Tiger TV, now let me just go there for 1 second. Always forget to prepare that part of it. Oops, move that over a little bit. There you go. So that I can see my wonderful engineer, L's notation, what he's given me here. And let me do this. I'm going to go to right there. Give me 1 second. I just want to be up to date with everything. I'm going to go to the front page, tfnn.com, right there. I'm going to click on the Tiger TV handheld. Click here while I'm doing it on my computer, no problem. Boop, I can see the charts exactly as I've got them, and you can see them. Now, what's really important about this, I'm showing this is every day I show this. In my newsletter, am I going to be able to find it here? Yes. In my newsletter, what I've got is I've got the, I just need to get the volume down. Oh, a little too many things going on here. There we are. I'm all ready. I'm showing you that there's the E-mini, the S&P E-mini, which is in leg C, and it continued in leg C today because it made overnight, it made a higher high. The S&P, I don't believe yet, has made its peak C, but it is close to if it doesn't make a new recovery high today, and I'm anticipating that's the way we're going to go. The Dow did extend leg D up. So every day in my opening call, you go to the front page, you type in your password, your name, your password, takes you straight to this to my opening call, and you will see here that I have a list of what we have every day. And from early in the morning, first thing I do is I go to the Dow. So my Dow chart is a very comprehensive look at the Dow based on the ChapmanWave methodology. I wonder if I'm going to be able to do this. I'm going to try. There it is. So that's for today, and that gives you the little rectangle there. It gives you the chart pattern. It tells you exactly what we're looking at. It shows you the cup formation, left side, right side, price time match. So every day is an education. Even if you're not trading, you are educated in the ChapmanWave methodology, plus other techniques. Because look, MACD is looking good. Stochastic, I mentioned, is at 95%. So I write that, and then I write another little epistle right over there on what I'm anticipating, what I expect, what I want to see, and what you can be looking for. So that's that, and now we're going to close this window. That's every single day, and that goes out, 6:30 in the morning, very early. Then close this tab. Oops, yeah. And then what I do is I also send out the Dow Diamonds. Well, the Dow Diamonds, that's a trading vehicle for the Dow. And what does that do? That shows you that we've extended in leg C up. There's that 9-period exponential moving average. There's the 200 period way down at 145. The diamonds right now are trading at 150.85. They closed yesterday at 150.91. I explain what we're looking at. I explain the different chart patterns. I give a whole précis on what's going on just in this one indicator. Why? Because it's so important. The Dow is in leg D. The 120-minute chart is in leg C. In the ChapmanWave, you expect at least a peak D. So that means that there is still more higher highs to come, and that we could have a pullback in the 120-minute chart, then go to leg D, coinciding with the leg D in the Dow, and then you have to be careful. That's just the way it is in the ChapmanWave methodology. Being careful means a bunch of things for me. Why? Because at this particular point, we are long. We are double long. We are 200% long. The DDM is the 200% long. Power share, this is the based on the Dow 30. And we went long on the 3rd of May. So there's been a fabulous move up. So what do I want to do? I said to subscribers, we want to protect our gains. So on half the position, I've raised the stop. The other half, I've made the stop a reasonable gain. Remember, it's 200%. It's not just the 100% gain. So I'm leveraging the initial buy entry point, because my thinking here is there is a chance, if the rotation that I discussed this morning in my opening call, if that rotation happens to occur right now, there's a chance that we don't get a very sharp pullback. We get a high-level consolidation as other sectors come on. If that doesn't work, we've got to be very careful. So that's that. Here's another thing. Close, yes. So then I send out an overview. This is all every single day. Overview section. My 5 quadrants, or quintiles are we going to call it. Look at that. There it is. There's that leg C up in the 120 minutes on the Dow, the same as the diamonds. They don't always correspond exactly, but in this case, they're perfect. And that says it's leg C. It extended leg C at this particular 120-minute chart. I believe right now we're in a kind of we're extended, and we need to be doing some kind of digestive phase. The VIX index right here is the volatility index. For those of you who know, followed my work for a long, long time, you know how beautifully the volatility index has given us absolutely amazing information that the majority of folks just, they don't read it the same way. Not even the people who invented the VIX are reading it the same way. And one of the reasons is I try to make it as simple as possible. And for my subscribers, I've explained what that simplicity is. I do believe that it needs to be as simple as possible. The more complex you make it, the more you have to think about something that should be just like you put your finger up in the wind, and you're looking to see which way the wind is blowing, or you got a flag or whatever it is. And this is like our little flag. It's just giving us a tremendous amount of information. The TRIN index has not been doing very much lately. That's fine. I've got my own proprietary indicator for the TRIN index. This is the Dow daily leg D extended today. This is the S&P leg C. It might be making a peak C if there's no new high above yesterday's high. Even by 1 penny, it extends it. If it doesn't, it's a peak C. And we're getting closer and closer to this amalgamation of all the indices getting into sync. All right, get rid of that. Then I send out the E-minis. I always send out the E-mini, and there it is. In this case, I want you to send the daily, and I want you I don't often do this. For those who don't watch my show, I show them the E-mini in the daily, which is in leg C. It's extended leg C. Cannot make D until tomorrow if there's a lower high bar starting at midnight tonight, because it trades almost all the time. And the weekly chart is in leg E. And there are a whole bunch of indicators which I explain to my subscribers as we move along and as they become more and more important or less and less important. On this particular chart right now, there is one indicator. I'm not going to discuss it on air, but there is one indicator that is saying to me, got to be a little bit careful over here. And that is what I'm going to be watching real closely. Did I forget to do the E-mini 120 today? No, there it is. E-mini 120, so many charts. There's that potential peak D. See that little plus sign? Well, let's look at it in real time. Close window, real time, And what do we have here? We have the 120-minute chart. I put the down arrow. Why? Because in the ChapmanWave methodology, what we're looking at is a top at 1361.00 as the MACD turned down negatively and the stochastic has pulled back. But the price is holding pretty darn well. I don't care. I still think that there's a chance that you're going to fill some of this this air over there, and you're going to get down to maybe the 1621. You could even at 1619 is consolidation probably going into tomorrow. But I'm still expecting another leg up in the S&P. So next week, I don't get any sell signals, I believe, if I am correct, until next week. Now let's go back to this. We've got, and then I discuss other charts that I think are very interesting, whether or not we have positions. Sometimes it's just not even important. But let me just say that at this particular point, we have 7 long positions, and every single one of them is up. Some of them up a huge percentage, 40%, so one is up 66%. And I wanted to go through a couple of other things here just to show you. For instance, we have AZO. Now, AZO, for some of you who know my work, has been on my short side for a long time, but the evidence was so overwhelming just recently that there was a very good potential, strong potential of it having a very determined, I didn't know how high, but a very determined up move. So we went long, and I think it was about 107, maybe just a fraction over 107, just recently. That was on the 3rd of whatever month it was, May. The 2nd or 3rd of May. So we're in long, and from 407, and it's trading now at 418. But look at this. And this is what I want to talk about. And I have 2 questions, and I want to get to those emails, and they'll be part of my the requests for this particular hour. If you're looking at this low bar of 375.12 back on the 19th of April, first of all, there's a lovely gap, and as that gap occurred, there was absolutely no retracement in the stochastic. This is what I call a squash, this particular pattern here. And what happens is the fast-moving average of the MACD takes the price very high and very quickly. And it very often goes to at least a peak C or a leg C, let's put it that way. While leg C is happening, the stochastic starts to pull back. And you're left with the torque from the stochastic leading to the MACD. And the MACD is the momentum, and the fast-moving average is your momentum. And that is very important to me. So I believe that there should be at least a leg C to the upside. But because it's at all-time highs, let me just double-check that before I say yes. Because AZO is at all-time highs, that means that there should be a leg D. And there's only one thing here. Do I use the 408,550 as a parallel wave count? Is that a phantom A and we're actually in leg C right now? I don't know, but either way, it's still very positive. I'll be right back. 877-927-6648, and then we'll discuss 3 stocks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everybody. We're back. We'll go on with these, and we'll also talk about, I am going to leave room today for the 3 questions I had from our wonderful Tigers. And so let me do this. Writing it down, and I will be back. So we're going to be with Mark in Denver. Hi, Mark. How are you?
Good. How are you?
I'm well, thank you.
Good. Hey, so talk to me about this this trade I got in today. I'm looking at I got into Facebook at 26.90. I put a 30-cent stop in around 26.60 because there's a little gap support there. And I'm looking for a peak D at 29-ish.
Okay, folks, what we're looking at is Facebook. FB is the symbol. Facebook, of course, many people know it came out back in, June of last year. It came out at 28.89, and it soared to a high of $45, round number. Plunges down to 17.55 just a couple of months later, and then it hits 32.51 January of this year, and now it's trying to walk the 9-period moving average in the monthly. Now let's go to the weekly chart. I know there's going to be a different kind of a trade, but I need to look at the different time frames, because it is so important for Facebook to get to about it's at 26.96 right now, down 16 cents. It's really important for it to get to about the 28 20. It shouldn't be very much because it moves so much. Many days it moves, good 1.5 to 2 points. So it should get to the 27.55 level by tomorrow afternoon or Friday morning at the latest. And then what it needs to do is to have a sudden spike to the 27.70, 27.71 to maybe 27.83 level. Reason why I say that is that it has made a peak A and a peak B and a peak C, which we've looked at before, and it has the potential for a cup formation. It actually looks more like the liver, or was that the heart? I can't remember. Anyway, call it a cup formation for now, but it'll break down I know you've got your stop tight, but what I wanted to say that if it broke under 26.65, if it closed under 26.65 in the next 2 sessions, I would just have to say, you know what, this is just going to be a rectangle failure mode. If it gets down to the 25.20 to the 24.90 area, I treat it as a buy with a 1-point stop going back up to this trading range in the high 27.28 area. Excuse me, if that's what it needs. Now let's go to the nitty-gritties. The weekly chart has the potential to make this cup and a large handle formation, but it'll become a rising highs and rising lows pattern if at any time in the next month and a half it can take out 32.51. That is 6 points higher. That is a lot. It's 20%. That's really a lot for the stock. So let's go one step at a time. The daily chart says that 27.27 9-period exponential moving average, which has been the repellent zone for 2 days, that's going to have to break to the upside, and the fast-moving average of the MACD is so far a positive. But if it closes below the red line, the slow-moving average of the MACD, that's not good, because the stochastics at 52%, it dropped a little. It actually hasn't dropped as deeply as you'd expect after the move from the recent high of 29.07 down to yesterday's low of 26.65, but it's dropped a little too much at 52%. If it was in the 63% area, I say, wow, I love your entry point because your risk-reward really is weighted towards the upside on a technical basis. So at this point, I have no choice but to go to the 120-minute chart. So here we go. There's a buy signal that goes to a buy mode from the low bar of 25.15 on the 18th of April at, I think it's 1:30 in the afternoon. And Eastern time, and then it goes peak A, B, C, D. If you're looking at the fast-moving average of the MACD, you'll see that is just, it follows the price pattern. A lot of people don't realize that, but if you're looking at that green line, that's a 9-period exponential differential of the 26 and the 12 moving averages. Well, it actually follows very well the pattern that you're looking at of the price movement. So it does not cross negative after peak F, the little silent doji, and the next day, the next bar at 11:30 on the first, it goes to 27.95 and pulls back to the black line, the 9-period exponential moving average. This is like watching the horse race that we watched recently while we were having dinner somewhere, lunch somewhere. So it comes, and instead of breaking down, it bounces, and I don't know what the gap up was on the second, but it was a gap up that went to a peak G. It's pulled back, and now the 200-period moving averages. You know what? It's worth taking another moment because this is both chart pattern. I'm going to do a little bit more to show the chart pattern we're looking at. I think you've got a real nice entry point. So we'll be back. We've got Mark in Denver. We're looking at Facebook, and we'll be back also with Ernie in Dearborn, Michigan.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of tfnn.com.
Hi everyone, Basil Chapman. We're all back. What I wanted to discuss, and we've got Mark on the line from Denver, and we're looking at Facebook. I wanted to show that there was a left side, right side price time action, the 120. I'm pulling it up right now. You can see it. But most importantly, it did not break underneath the gap low of 2660 back on the 26th of April, and that's kind of 2660 to 2627. So it's actually a 33 cent gap, and that's what Mark was referring to. More importantly, what I'm looking at is that when the right side doesn't test, but it holds above, and then there's a pop to the upside that also holds, trying to make a high-level consolidation in the lower part of the chart formation, what often happens is that while it's doing that, the technicals improve. And just as I made a big deal about the price holding like the 9-period exponential moving average differential in the MACD on the upside, which is a fabulous trading vehicle going up, so on the way down, the price has gone down below the 9-period moving average, and the 9 EMA is differential is pulled back and now it's starting to flat out. Simultaneously, you'll see these red bars That's why I've changed colors, especially so that people can see them. You see, that's the histogram going to the zero line. I don't use it much. I use it more as a reference point. There's been a decrease in the difference between the two moving averages here, and that's really important. I think you've got yourself the potential for a nice trade. All I'm going to say to you is, you know your stop, so I'm not going to interfere with that. What I would say to you is the moment that it crosses 27.30, goes to 27.33, you want to see where the fast-moving average of the MACD is, if in the 120-minute chart, or maybe the 60 if you're looking at the 60. If it's just about across and then it crosses positive, that says a good chance that the next level target would be 27.85, the high of 11:30 in the morning on the 7th. So I think you've got a great entry point. I wanted to go through it step by step because it's a kind of a tiptoeing in, because this was a deep pullback that it had from peak C. You need to see that happen. You need to see it unfold towards the end of the day. It needs to go counter to the market. Market's down 0.03 in the Dow, 0.20 in the S&P. And I would want to see, this is down 0.33, I want to see Facebook become a leader and to be up about 13% when these other indices are a little bit mixed. So those are the parameters I look through. I think your entry point's good. The weekly chart says it's absolutely imperative that it doesn't hang around here. It breaks above 29.07 for a week from Friday, and that'll be very good action. Hope that helps you.
Helps a lot. Thank you.
Thank you very much. Mark in Denver. We're going to Ernie in Dearborn. Hi, Ernie. How are you?
Oh, not too bad, Basil. Just, Henry Ford was born in Dearborn, and, of course, we want to keep the people's knowledge whenever they're through the area. But more importantly, the reason I'm calling is I'm calling about a stock we've discussed before, and that's this Sarepta, SRPT. It's a biotech stock, and, of course, biotech stocks can be very, very crazy, as you know.
That's right.
My specific question is, with all the various things that we watch a stock with, in this particular one, I'd like you to maybe look at the OBV and tell me how important you think that is compared to the other items.
Okay. Folks, very good questions. Ernie is looking at a stock called Sarepta Therapeutics. Is that it? Yep, Therapeutics, Inc. is trading at SRPT, is trading at 33.78 up to 37. I had this once for my subscribers. We took a very small loss. We had it at 36.21 back on April the 8th on the way to that big spike. And I didn't get out in time. It was a very nice profit, but unfortunately I let it pull back at a peak D, and we took a minus 0.38 cent loss, and it's been on my list ever since. Now, it's got a gap. I'm not sure what the gap down is all about, but what happens in the gap down like that, very often, not only will the technicals deteriorate, you will get the on-balance volume. Now, I'm expanding this so people can see it. Here we go. Open it up, open it up, open it up. This is the daily chart. That blue line right there stuck in with the stochastic, which is the red and green lines. There's the relative strength, which I always have in background over there. It's gray, if you can see it. Let me just check on the chart. Yep, you can see it. It's faint, but it's there. Stick your nose right up to the screen. You can see it. And these volume bars in gray, those are the volume bars in gray. Now, what's really important about the stock is that there was a double bottom in the on-balance volume with a slightly higher high, which is foretelling, as opposed to other indexes, that the on-balance volume was strengthening as the price was coming down to its trough D. And a beautiful left side, look at this, left side, right side price time match to the day. I love this. And what happens is it goes peak A from the low of 28.90. The MACD starts flattening out. That's that green line there. And that's the red line. And just today it's crossed positive. And the stochastic has been rising. I had this on my list. The moves are always so very quick that if you weren't in yesterday, which looked very ugly at a certain part of the day when it opened, down at 31.64,
it had a rapid price increase in the last half an hour of the day or so, implying something,
Right. And then today it gaps up. So the lower yesterday was 30.19, and it looked horrible because that was that dreaded H pattern. That's why I always say, when you're looking at time frames, promise yourself to have the patience to wait for the full time frame to complete. If it's a weekly, wait until Friday at 4. If it's a daily, wait until 4 o'clock or 4:15 in the afternoon. If it's an hourly chart, wait for the 60 minutes and even wait for the start of the next bar. That's what I think is important. So this is leg B up. I love the action so far because there's been a very slow, it's like a pot boiling when you put the water on, you don't see it for a little while unless you're a frog. And what happens is slowly but surely it's turning up and the price today accelerates higher. The on-balance volume was leading and now it's just kind of a participant. It's just following.
Sure.
So my answer to you is that I would have to go to the 120-minute chart, and in the 120-minute chart, the on-balance volume is lagging. Now, I discussed this with my subscribers the other day. I said the Dow Diamonds, this is not a chart with a notation on it, this is just a chart to show you. At this point right here, the Dow Diamonds showed, I'm going to draw a vertical line, that the on-balance volume was lagging. Well, I've done workshops on including on-balance volume and other moving averages, and there's a whole thing that goes with it. But what's most important, now I just want to check that you can actually see it on the screen. I'll see in a moment. Actually, what I'm going to do is I'm going to make it thicker. So style, give it a one line, and then I'm going to go back and make it weight is bigger. There. At that point, the stochastic was great. It was above 80%. This is the Dow Diamonds 120-minute chart. The MACD was good. On balance wasn't. And then what I say to subscribers, I'm guessing, and it can only be a guess because on balance volume is the cumulative price of that particular bar at the close. If the price ended up by 1 penny or more, you add the cumulative volume to the previous, however long you've been counting it. If it's negative, you subtract it. So I said I can't anticipate what's coming up, but my guess from the high-level consolidation, this is what I was thinking, that big gap up move there would be seen at some point as the on-balance volume climbed higher, and until I saw the on-balance volume give me some kind of toppy action, we might see higher prices in the DIA. So now let's go back to yours and apply the same methodology, SRPT, I think it is.
Okay.
Yes. Now what we're looking at is on-balance volume has just kind of wiggled its eyebrows, if to say, yeah, I can see you, but I'm not really interested right now. So it's a fabulous question because if Sarepta Therapeutics is able to hold this gain in the 120-minute chart, this is AB 3026. Yeah, it's ABC. This is either leg D or brand new A if it's restarted. I'm calling it D for now to be safe. If, in fact, it holds and it breaks above 34, I bet for the first time you will see that on-balance volume start to move higher. And as it moves higher, it's going to say to you, now there is a chance that you could trade off the 120-minute chart, anticipating that it's going to try to move at least to the gap of 35.59, the high of the 17th. Well, that's 2 points, almost 2 points higher. That'll certainly get the on-balance volume to move higher. So I'm answering your on-balance volume question. It's okay in the daily. It was a leading indicator. Now it's just a participating indicator. It's not leading anymore. In fact, the MACD crossing positive, if today it ends positive like this, is a much better indicator. Now you want to look at the 100. Do you use a 60 or 120-minute chart in your?
120.
120. Well, if you're looking at the 120, you'll see that beige, goldy, pinky line, whatever it is a 200-period moving average, and that has been resistance. Finally, it's going to become support, and that level is at about 32. Right where the 9-period moving is, they're about to cross 32.11, 32.12. So that's key support. Now, do you have the stock? You've just been following it, and it's just now you want to know what to do.
I haven't, and I've been following it.
I'm going to make a suggestion. If you're interested in the stock, knowing that gap down is something to keep in mind,
sure.
And if you want to treat it as a trade, which could turn out into something more seriously, then what I would say to you is you could just nibble on, even 5 or 10 shares right now, just to get a better feel, because during the day, it's going to be flashing all the time to tell you whether the market's moving up and it's moving down, or if it's moving with the market, or if the market, I suspect towards the end of the day, gets a little bit weaker. It's going to give you that information, because if it holds strongly and even rises, it's independent of the market, and that's very important.
Sure.
So, I mean, you don't even have to get the 10. You can have, if you've got a simulated account, you can have that. I just want you to be able to watch it much more closely. Why? Because when this moves, if you're not in it, it's really tough to jump aboard. I don't know if you tell you.
Especially biotech stocks, yes.
And it's a biotech. But the weekly is in a rectangle formation, which says there is a chance that if we can get anywhere into the 30, it's a 33.73, into the 34.40s, something like that, it's going to try to move higher. It doesn't say it will go back to the recent high, but it says it's going to try to move higher. But I want to do shorter term. If you call me on Monday, or maybe Tuesday, let's look at it again, because there might be longer term implications depending on how it acts over the next 2 days or so.
Basil, very detailed explanation. I'm sure your viewers really appreciate it.
Thank you so much, and I hope that mission's going to really improve. I love the way Ford's acting. I love the way General Motors. I think there's a comeback. Hope you guys are going to be reaping the rewards. Thanks for calling, Ernie.
Bye.
Thank you. So, folks, this is what I want you to do. Let's go quickly, because I know that I'm going to run out of time. I don't want to run out of time. I had a question. The first question was Lulu. This is Lululemon Athletica. I would have said, hey, I mean, who's going to be paying for all that sporty stuff? But, you know, everywhere you go, people are so into the sporty stuff. So Lululemon has had a spectacular move just recently, because it looked like it was going to break down. It's making this quadruple double wibble top formation that's trying to test 8109 was the high, all-time high. It's had this rectangle formation which says, hey, if I hold well, I'm going to try to retest that 81 area, and it's at 78.74. So the question is, and I'm not sure if the person was long or not, it was just a question on the analysis. I love the action. Just recently, and now I'm calling this a leg B up. Now, I could be completely wrong about this, but the stochastics at 78. I prefer 80%. The MACD is just turning up. I better be a little bit cautious. So I'm going to say I'm calling it F/B. In fact, I'm going to give it the preference of B/F. I like it. If you're long, all I'm going to say to you is it has the potential to retest 81. But I would say if you are long, some part of your position should have a stop. I don't know if I want to go all the way down to 74.86 was the low today. I would say that if it starts to drop is after all that athletic stuff. 76.36, if it breaks under 76 either today or tomorrow, I'd say, you know what, just lighten up a little bit. But if you are thinking of going short, hold off. I don't see anything yet that I would short about. I would short Lululemon, but as it gets towards the 80.20 to 81.40 area, that's when I'll have another look at it, and that's maybe where it makes a double top, and we can think about shorting. So that's good for you. The next one was CMG, one of our favorites in my opening call, because we had just a fabulous gain. It was about a 100-point gain total in those different short positions, but we've also missed it a couple of times, so subtracted maybe about 7 points or so, maybe 8. It's at 369.26 up to 93. You know, these big triple, I don't remember a time where so consistently I've seen so many triple-digit stocks acting so well, except for late 1999, early 2000. I don't want to put this into that category at all. I'm just talking about prices of stocks. Now, what's really important to me is that in terms of CMG, Chipotle Mexican Grill, it had the high of 442.40, a peak F with a doji candle there and the next month, and it's pulled back to 233. I'm calling this a retracement mode. I'm going to get back into, in a moment, back into the analysis of CMG, and also someone asked you about XLB. I'll just put that up as we're going out for a break. I'll be right back straight after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Basil Chapman, Tiger Technicians Hour. And let's just quickly finish this. So CMG is in this trading band. I would wait for the candle that's forming right now is going to be really informative for me coming into Friday, tomorrow at 4 o'clock. How the following week opens is going to determine for me whether or not we once again go back to the short side of CMG or just hold off as some kind of a top is forming here. I don't think it's going back to the 442.40 high. It's at 369. I would not be surprised if somewhere in the 370s that it starts to really struggle. It's just trying to get back into that really ugly candle, the one that was beneficial to us back in July, the week of July 20th of 2012, where it dropped precipitously. And fortunately, we were on the short side for about an 85-point gain. So all I can say is I would not be doing anything if I was long. I'd raise the stop on this, tighten it up on one position. I'd have a trading stop, make it real tight. And I would, if I was to short, I would say don't just give it a little time. Maybe early next week will be a good time to do it. And I'm not yet sure that it's going to do much more than test the 348 level of the 9-period moving average, but that is 20 points. We'll see. So I'm doing nothing there. Then real quickly, XLB, I was on... the XLB is the S&P Selected Materials Spider Fund. Now, this is very interesting. It's made a kind of a V-shaped formation. Very, very hard work, and it's gone from the all-time high was back in 2008 at 46.54. This is the S&P Select Materials Spider Fund. Plunges down to 17.83. Let me type that in, 17.83. Oh, yeah, I've got to thank Ronnie at TradeStation for really helping me. I hope that we've got a real great fix for some of the problem that I had. Nice. I love simple resolutions. I think that's the way it's working here. We'll see. So, and then I made the V-shaped formation after peak E. It's gone to another leg E. But the stochastics at 89%, the MACD is pretty good. So the monthly says, hey, nothing yet. It's still acting well. The weekly is broken out. I'm calling this a leg E. Now the daily, I think the question was on the daily. I've got it in leg C, the same as the SPY. Look, so many of these things. SPY leg C extends today. S&P leg C. All I'm going to say, NYA, what was the NYA? Leg D. Oh, okay, maybe even a peak D today. I'm getting closer and closer, especially since I just added another stock to the portfolio. When I get to 7, I just know I've got to be very careful. So I'm probably going to have to lighten up somewhere and somehow, but I think we're getting close to at least a shorter term consolidation. That's all I'm calling it for now. I don't have any indication that it could be more. Like the MACD is at 97%. The MACD is very strong. Stochastics at 97%. Normally you wouldn't get a smash to the downside here. Not yet. You'd have to wait a little longer for some weakness in the stochastic. So I don't know what the question was. It was just would I do the XLB and there XLB. That was the NYA. If I would do the XLB, that's what I meant. The MACD is very strong. The stochastic, like the NYA, is at 97%. I think we might be rotating. If I'm correct in the rotation, then we're looking at the heavy industrials as starting to come alive here, and some of them are in the Dow, at least 1 or 2, and that in fact could ameliorate any downside activity. I don't know. That's my thinking. Thinking is not acting. My acting is that I'm going to take positions. I'm putting in tighter stops now. I'm being smaller positions on the long side. Now I'm starting to look more at what would constitute sell signals that could be very sharp, quick, sudden moves to the downside. I think a move to the downside, when it comes, is going to be sharp, swift, heavy, look ugly, and get all the work done in a very short time period, and then build in a rectangle formation to the downside. And yes, that's right. In a liquidity-driven cycle, cyclicals get the last boost in a correction. Great information. Thank you. That was imparted to me. Folks, I am still looking for higher highs into early next week. That's my thinking. That's what my plan is. We'll see if it unfolds. And I'll be back tomorrow. Stay tuned for Larry Pesavento. Wonderful show with Larry as always. I'll be back tomorrow.